Let's start off with the basics, such as what is a dividend? When a company has positive earnings, they have two primary options as far as what they do with those earnings. If they are in growth mode, they will often reinvest those earnings back into the business, and this could mean saving up money to acquire a competitor, for example. However, there are hundreds of well-established companies out there that are not necessarily looking to grow, and that's because they've achieved near market saturation. Take Coca-Cola, for example. They've been around since 1886, and they have been growing their portfolio of brands for over 130 years now. At this point in time, you could drink one new Coca-Cola beverage every single day and not run out of new drinks to try for over 9 years. Coca-Cola has more than 3,500 different beverages under over 500 different brand names. So a company like Coca-Cola is generating consistent profits, but they hit a ceiling a long time ago in terms of their growth factor. So what they do instead of reinvesting all of those earnings is they actually share a portion of those earnings with the shareholders in the form of a quarterly dividend payment. In most cases, dividends are paid out on a quarterly basis, but you also have monthly dividend paying stocks, as well as some stocks that pay dividends once or twice a year. Now, there's an important distinction between these two groups of companies that we've just talked about here. The ones that are reinvesting their earnings to grow as fast as possible are referred to as growth stocks. And the companies that are simply operating in a consistent manner and then sharing a portion of their earnings with the shareholders are called income stocks. For growth stock investors, a return on investment is going to be generated through the business becoming more valuable over time, and in turn, the share price becoming more valuable too. Income investors may still see some appreciation in the underlying share price, but much of the returns generated will be from those dividend payments. You also have some companies that fall in the middle, where they are reinvesting earnings to grow the business, but they're also paying out a dividend, and these are referred to as dividend growth stocks.